All right, guys. So I'm Catherine Barnett with LoanFit. Just a little bit about me. I've been in lending, gosh, for since 2002. So I am marking my 22nd year. I started when I was 5. So yeah, I've learned a lot. But as I was mentioning, FHA is one of the major platforms and lending agencies out there. There's a total of 5. And I'm going to be doing an essentials class basically every Thursday for as long as I can until I run out of ideas. And it's really just to teach agents enough to make them dangerous so that they know what FHA is and then, or know what any other program is and can handle objections when they're meeting someone, say in an open house, or when they're trying to write offers. So my job today is just to teach you enough to make you dangerous. And I'm going to start with what is FHA. And so oftentimes, most people, including consumers, think that FHA stands for first-time home buyers. And that is actually incorrect. FHA stands for Federal Housing Administration, and it is governed by HUD. And although FHA makes the loan products, they make the rules, the investors are the ones that issue the loans. So your lending institutions are the ones that issue the loans, but FHA loans are insured. So a lot of lenders like this loan, they're willing to bend the rules a little bit because FHA will insure the loan. Most people feel, though, again, it's just for first-time homebuyers, and I want to reiterate, it is not for first-time homebuyers. Anybody can get an FHA loan. So what we're going to be covering today is going to be FHA resources. If I get your email address, I'll be sure to email you the direct links that we speak about here or that I cover. But we've got FHA resources, and you can even call FHA. So we'll go over that. Advantages of FHA, they've got some disadvantages of FHA. And when you're writing a contract, some things you need to consider about FHA. And then FHA has some really cool programs out there. Some of them can be a little bit tricky, and some of them are not as popular as they once were, but we could see them make a comeback. So FHA resources, though. So HUD website, great resource to find out any rules. We're going to talk about one of FHA's drawbacks is they have a loan limit. So we're going to cover that a little bit. And I've got the county loan limits that each time you run a property, say you're helping a buyer look in Weld County, and now they're moving to Larimer County and back to Weld County, we want to make sure we're working within their limits and their loan limits. So we've got that. We've got Denver Homeownership Center. Each, depending on where they're buying at, each area is going to have a different contact. So Denver, I think, covers your Arizona, Utah, Denver, and possibly South Dakota. Don't quote me on that, but they all have it divvied up as far as who covers what. I lend in 42 different states, so we'll call whatever state applies to us. I just referenced Denver as it's going to be the most popular one. A lot of my audience is from Denver, so you can always call FHA if you have any questions or trying to strategize, if you can't get a hold of me, or if my answer is not sufficient and you're just trying to figure it all out. Condos, we'll get into that a little bit as well. FHA has approved condos, and those approved condos where they've gone in and individually approved the condo complex. Well, most of your condos are expired. So there's certain things that you're going to want to do when writing on a condo, and it's FHA, the approach that you're going to want to take. But these are the resources in case you have immediate questions. Again, make sure to put your email in the comments. I'll make sure to email all of the links that we speak about today, as well as a presentation if you want it. So let's start with advantages of FHA. So one of the most popular things about FHA is that it's low down. It requires only 3.5% down. 100% of it can come from a gift. So they can get, anywhere between 15% or 20%. There's no limit on how much money that they can put down. and it can come from a gift. And they're real flexible about who the gift donors are. So they're even willing to accept, I'll target people who are getting married and say, hey, instead of another toaster, why don't you have your parents and your family give you money for down payment? And with a verification that they had a wedding and such, FHA will take that as a formal gift. With that, FHA's gift requirements are a little bit more strict. They do require, and when it's individual, they do require that the borrower or the gift donor sends in a bank statement for 30 days to show that they have the money to gift the borrower. So sometimes that can be a hindrance. And we try to work with that up front just to say, hey, tell grandpa he's going to have to give us a mortgage statement, because sometimes we get some pushback on that. What a lot of people don't know is that FHA will allow for 1 to 4 units. You could buy a 4-plex on an FHA loan with 3.5% down and rent out the other 3 units. So it's not often done, but if done right, I've seen a lot of parents co-sign for students in a college town. We had one in Chandler where it was, you got a college town, Chandler, Nebraska, and it had a multi-unit, and the father co-signed for the son. Son didn't have any income, but it was a 4-unit property. He's renting out the other 3, and he's paying 0 money into his property right now. So basically the renters are paying it for him. So that can be a great use of a 1 to 4 unit, or people who are willing to, live in a smaller place with attached dwellings. So it's not often taken advantage of. And on a side note, conventional has something like it, but not as good with cosigners. Either way, there are options out there in this case. So reserves, though, are not required on an FHA loan. If you have a tough loan, they can be required. So I just want to make sure that, it's not misled that they're not required. It just depends on the loan. FHA also has flexible underwriting. You can do a manual underwrite with FHA. Most conventionals, you can't do an manual underwrite. I've never done one. I don't know if it exists, but I know you can't. I know you can do one on FHA. So FHA will allow for manual underwrite. They will allow for no credit scores. They will allow for traditional credit. So they will bend the rules a little bit with their underwriting and not have as many requirements as conventional. And so sometimes that would be another reason why people would go FHA. Again, I did say, skip the extended debt to income ratios. Conventional stops at 50% debt to income ratio. It's a hard stop, really can't get past that. FHA will go to 56. So you can move into a higher debt to income ratio and be able to qualify for folks going FHA a little easier. Back to no credit score. I've done several no credit score loans. If you're a Dave Ramsey fan, you may not have a credit score. So we can do no credit score loans. But I will say this, most of your lenders have huge manual underwrite / no credit score hits to the rate. So the rate ends up sitting a little bit higher when you're not using the credit score to qualify. So we try to find alternatives with that, but it's great for those that don't have credit score. They will also accept a student as job history. So even if they've been in high school or college and they're just starting their job and it's their first job, we don't need to have a 2-year history of that. Their school counts. So that's another great thing about FHA. Okay, so cosigners are allowed. That kind of goes with the school. They called the program, it's kind of an outdated program, but they called it Kitty Condo. And it's where a parent cosigns for a student going to school, in which the student does not have to qualify at all for the loan. It's really just the parent, but the student is on the loan. They also have a similar one in reverse where you're co-signing for your aging parents. So if your parents are looking at retiring, this is another avenue in which you can get a co-signer to help qualify. And while we're in the basics, FHA, when you hear about reverse mortgage, it's an FHA mortgage as well. So I'm not gonna get into the advanced FHA world, but FHA FHA reverse mortgages is really just an FHA loan in reverse, but it's part of the HUD program, just as an FYI. Another cool thing about FHA, government rates in general. So FHA, VA, USDA, they sit lower than conventional every single time. And so they, on average, they're probably 0.75% to 1% lower than conventional rate. If you have a borrower who's getting a similar rate as conventional, I would question it a lot. I would really push that agent or that lender to go, why? Where is their credit score at so that the rate is that high? And their credit score may be in the tanks, and that's why their rate is that high, but it gives you something to question because now you know. FHA does have mortgage insurance, just like conventional does if you owe more than 80%. FHA's mortgage insurance just got a huge cut this past summer, in which FHA was kind of called the comeback kid because FHA has very little loan level price adjustments that drive that rate up, and their mortgage insurance is low. So we're seeing a lot more FHA loans now than we were, say, 2 years ago. All right. FHA also has an upfront mortgage insurance, which we'll get into, but their monthly mortgage insurance is pretty low. While they have loan limits, they do not have income limits. So you do not need to make a certain amount of money to qualify. You can make $1 million and buy an FHA home, or with an FHA loan, they don't care, okay? Cool thing about FHA that a lot of people don't know about it is on the servicing side, once they close, they have a great default avoidance or default assistance out there. So where, I don't know if you guys have heard the 40-year mortgage, the 40-year FHA mortgage, that's what that is. It's just a modification of an existing FHA loan turned into a 40-year to help borrowers keep their homes and avoid default. I've also seen where FHA will, like I had a gentleman who was injured at work, and he was probably about 6 months behind on his mortgage. It was about $18,000 behind on his mortgage. They were already starting the default program, or foreclosure, all of that. And he was able to get back to work, show that he was starting his job again, starting to pay his mortgage on time. And so the lender or the servicing company / FHA worked with him to take that amount of money that he was in default on $18,000, just stick it behind the mortgage and let him have a fresh start and start at a current payment. So I love FHA for that reason. It became super popular in 2008. It could be popular again, just if people reach financial hardships with a recession and such. And so if you know anybody who's in an FHA loan who has financial hardship, a lot of folks just don't realize what's available to them. So if you could be a resource to say, hey, call your servicing company, they usually are willing to work with you. The other thing that you guys may have heard is all FHA loans are assumable. So a lot of folks are in great rates right now, and the buyer coming in can assume their mortgage. Drawback is that most servicing companies are not prepared to deal with assumptions, and they can take about 120 days to get done. But assumptions are cool. The other drawback is that they have to pay the difference. So let's say we have a borrower who owes $400,000 at 3% interest rate. Great. Well, the incoming buyer can assume that money at 3% interest rate. But let's say the house is being sold for $600,000. Well, that difference of $200,000 has to be brought as cash to close. They can get a second mortgage, but they can only go up to 90%. So assumptions are available. They don't happen a lot, but they're still available. Other great thing about FHA, and it's going to be real popular, is going to be the streamlined refis that FHA offers, where a borrower can refinance into a lower rate. They don't have to qualify for that loan. They don't need a new appraisal, and they streamline into a lower rate. It's a pretty cheap refi. So it's another great thing that FHA offers once they're in the loan. We're talking a little bit about loan limits, and I'm going to jump to loan limits where it's going to be real busy on the screen. And I just referenced Colorado. I want to remind you guys, most people get stuck with the loan limit versus the purchase price, and it's the loan limit not including any upfront mortgage insurance. So I'm just going to pop on here, Denver. The Denver area, we'll start with Adams County. So we've got Adams County. their loan limit is considered a jumbo loan limit because it exceeds the Fannie Mae county loan limit of 766,550. So Fannie Mae's county loan limit or in general loan limit is $766,550. So Adams County exceeds that and is considered a jumbo FHA. Not a huge deal. Again, I don't want to get in the minutia of advanced FHA, but they have extra requirements when we're exceeding the traditional $766,550 loan limit. So Adams County is 816, but as you move into 2-family, 3-family, 4-family, the limit is 1.5 million. So it's pretty forgiving on what you can qualify for. If we get into Boulder, ticks up a little bit, not a lot. Your traditional though is going to look a lot more like I would say Cheyenne here and Delta and Custer, where you have 498. 498 is the general loan limit across the board, and then each county you'll see a little variance of that depending on their average sales price. Okay. All right, so let's talk a little bit more about disadvantages of FHA. So disadvantages, we just chatted about that. County loan limits. Boy, have I been caught with my pants down a lot on county loan limits, to where especially like Adams County versus Weld County, they're just so close to where you might bounce right into another county and then be fine with it, writing an offer, and then you're like, crap, it's Weld County and it's lower. So you got to pay extra special attention to county loan limits when you're exceeding that 500,000 right now. FHA also has stricter appraisal requirements. I'll show that a little bit and just in what they're, I have a checklist that I'll share with you guys once I get your email, but they do have stricter appraisal requirements. They're going to look for some health and safety issue first. They have issues with peeling paint. Some appraisers like to think that there is a requirement for appliances. There isn't, but they love the condition on that. They're going to make sure that things are in general working order, and these appraisals take a little bit longer to do. So we want to be mindful, especially once you get that inspection. If you need to send that to me to go, are we going to be okay here? That we can try to combat those issues faster. My most common things on an FHA appraisal is going to be peeling paint. It's going to be broken windows. It's going to be roof issues. And I would say the stairwells and the handrails to the stairwells. So those are going to be our most common complaints that I see, but I swear I've seen it all. The other disadvantage to FHA is going to be mortgage insurance. Although their monthly is cheap, their upfront is not great. So they charge 1.75% of the loan amount, and they roll that right on top. So of the 3.5% that a borrower is putting down, 1.75 of it is rolled on top. So they're really only feels like they're putting down 1.75%. So that's a drawback to FHA. Owner occupied only, no investors, although you can have a non-occupying co-borrower. This is not for investment use. It's owner occupied only. So if they buy a 1 to 4 unit, in let's say a 4 unit, they have to live in one of the units for at least 1 year. That has to be their intent. If they are delinquent on any federal debt, so student loans are a big one. So if you have somebody who's like, screw it, I ain't paying these student loans, they will not be able to get an FHA loan if they are delinquent until they are caught up in it. So same things with SBA loans. SBA loans also fall into the ability of not being able to get a government loan. They pull a report called KVARs, and that KVAR report will show their delinquency. And sometimes it doesn't even show up on credit. So sometimes we find mid-process that they do not qualify because of their delinquency of federal debt. So we like to try to ask that question, are you delinquent in any federal debt? And I would tell you 10 out of 10 times, they always say no. But so this comes up usually midway through the process. FHA requires a bit more paperwork and documentation that most folks don't like to deal with, especially conventional likes to keep it easy. So we try to prepare folks that it's going to require a bit more documentation. Property restrictions, we've gone over that a little bit with appraisal, and we'll go over that more on condo. Condo approval requirement is a drawback. They're pretty strict about their approvals. There's some way around it. We'll go through that. 90-day flip rule. So FHA has a 90-day flip rule that will cover a little bit more. But if you have a client who's bought a house and fixed it up and turn around and flip it, you can't close till the 91st day. So there, and even then, depending on what it's being sold for, may require receipts, a second appraisal. It's a big drama with the 90-day flip rule. The other drawback to FHA is that the appraisals stay with the property for 90 days, not 6 months like a lot of people know. I had a seasoned agent call me yesterday, and we were talking about her FHA appraisal, and she's like, well, it stays with the property for 6 months, right? And I was like, no, it's only 90. She's like, you're kidding me, right? We've declined every FHA offer because they thought that the appraisal stuck with the property. So it's only 90 days. That did change, gosh, a few years ago, but it's 90 days that the appraisal sticks with the property, and that means the value and the condition of that appraisal. So FHA does everything through a case number. We have to order a case number in order to order the appraisal, and that case number is what says, ding, 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 ABC Mortgage Company has already done an appraisal on this property, and so we have to get the appraisal transferred, and I'll discuss that a little bit more on the next slide. Rent sustainability. So when we get into the 2 and 4 unit property, we have to make sure that the rent can sustain itself. And there's certain calculations to it, but we have to make sure it's a good deal. I'll be honest with you, especially in your higher priced homes right now, it's been tough to pass the rent sustainability. But my Chandler property, easy, because the property was cheap and they could get rents for it and it had a good rentability. But when we get into higher end, higher priced homes, it's a little harder to prove. Buyers can also walk away if the home does not appraise for purchase price. So no matter what, in the process of the purchase, if that home does not come in at value, then a buyer can walk away no matter what. It could be the day of closing, can walk away no matter what and get their earnest money back per the FHA mandatory clause. And then FHA also has more closing documents. All right, so things to consider when you're writing an offer with an FHA buyer. And let me back up. When you're putting a house on the market, a lot of people you'll see go, this home's eligible for VA, FHA, conventional, USDA, whatever. I say, know what you're listing, but it is not your job to qualify the buyer. So I have seen a buyer buy $1 million home with FHA, put $500,000 down because they had a bankruptcy 2 years ago and have to go FHA. That's one thing that FHA is better at, is that their credit events, they allow less time before you can do something like a bankruptcy. Bankruptcy, you only have to wait 2 years to buy a home. So when you're doing a bankruptcy, most times the equity in your home is not used against your bankruptcy. So by the time these folks get done with their bankruptcy, they're sitting on a load of cash. And I've seen some crazy thing happen where they're putting a large amount of money down, but they have to go FHA. So when you're listing a property, don't disqualify what it qualifies for. Put in there that it's FHA, put in there that it's VA, but know your limitations. Know that it's over the FHA limit, or know that it does not approve through FHA's condo list, which I'll talk about some more. So just know what your limitations are, but don't disqualify it for the buyer. Let the buyer qualify or disqualify for you, okay? But when you're working with a buyer and you're writing an offer, some things you need to pay attention to: the flipping rule. So make sure that the title has not changed hands in 90 days. And that includes a title from a wife to a boyfriend, and now the wife's not on it anymore. So that includes in the flipping. When you get into LLC, like somebody moving it into an LLC, as long as you can prove the owners are the same, we're fine. But if we can't prove that the owners are the same, then we get into a flipping issue. So just make sure to check the title, and that you'd want to do that on your listing as well as when you're working with a buyer, that you fall outside of the 90-day flip rule. Appraisal issues, again, just make sure we're checking for condition. My next slide is going to go over a checklist. Again, I'll send you that checklist because we'll be limited on time here. But you want to make sure that if you're going to allow FHA buyers, make sure that you have your property eligible for an FHA loan. So go through the checklist and make sure that your listing represents that. And then if you're writing an offer, that the offer represents that, so that you know right away if we're going to have issues. FHA amendatory clause. When you're writing an offer, some contracts in some states, I'll pick on Colorado, some contracts in some states, if you write a conventional offer and then it's switched to FHA, we're going to have to get an FHA mandatory clause because initially FHA wasn't checked. So FHA mandatory clause is signed by all parties, including buyer and seller. If it's part of the contract and you went out the gate with an FHA loan, then we usually don't need a separate FHA mandatory clause signed initially. It'll just be signed at closing. Okay. The condos. So I'll get into that one where FHA goes in and approves condos. Condos are usually an issue when you have more investors than you do owner-occupied owners. And second homes are considered owner-occupied, but it's kind of hard to figure that out on title. And sometimes HOAs don't have it together enough to count second homes. So there's one time I pulled a condo complex and there was like 200 units, and I went through each one of them to look for the rider for a second home in order to show that they had more owners than they had investors. But that is the most common reason why a condo is not approved. They have to renew their approval status, and most HOAs don't do that. They're not pushed to do that. And especially in an environment like we just came off of 3 to 5 years ago, they didn't have to do that. FHA was not a front runner in a lot of loans, and well, now it's a front runner in a lot of loans. And so more and more HOAs are starting to get better at getting their approvals done. But the approvals also are going to check into what insurance do they have? Do they have enough coverage? The condos in Florida are really struggling right now because of their roof coverage. Condos are in general difficult to get approved because of their strict requirements. FHA does allow for a spot approval. So let's say an HOA condo is not approved. We can hire somebody to go in and do a spot approval, get all the stuff together and just approve it for that one buyer. We usually ask for about 2 to 3 weeks on the contract to do that, and not every lender can do that. But a spot approval is there if you need it. Don't count on it because they still have to go through quite a process to get it. Okay. They're also looking for litigation too. Litigation in general for a condo is like a big no-no. So condos are just treated differently than townhomes. And since we're on a basic call, the best way to tell the difference between a condo and a townhome is lot and block. Lot and block is a townhome. A unit or any verbiage of condo in the subject line or in the what's the word I'm looking for? A legal description is a condo. If they have a condo in there, it's a condo. So you know, there's a lot of townhome style condos. I live in one, or I own one, and so it is a condo because it's not a lot and block and it's a unit. So that's just a quick way to tell the difference between a condo and a townhome. And the biggest ownership difference is that a townhome owns a piece of the land, like just a little square, and a condo owns none of the land. So moving on to seller concessions, I'm going to go over that, and I'll send you a quick little cheat sheet on seller concessions for all agencies. And then manufactured homes, FHAs allow manufactured homes. They're a little bit more strict than conventional when it comes down to manufactured homes. They have issues with how close a well is to the home, but more importantly, all manufactured homes require an engineer report, and it has to be it has to satisfy the engineer. So not only are we doing an appraisal on a manufactured home, but we also have to get an engineer report no matter what. FHA requires it. So it adds about a $500 fee to a borrower's process. And again, we're in the basics. So the biggest difference between a manufactured home and a modular are HUD tags. So a manufactured home has HUD tags. It's like a VIN number, usually on the outside and underneath the sink. There's also a serial number that a manufactured home will have that sometimes that the appraiser will need. I just had an appraisal transferred and we needed the serial number on it just to show the history. And then you have BOCA tags, and BOCA tags are for modulars. And modulars mean that the home was built to code per HUD guidelines. So the home was built to uniform code. A manufactured home means that it was not built to code. And then a manufactured home was brought by a tongue and axle by a vehicle, like a big truck, taking them tongue by axle. And a modular was built like a Lego on site. So it was manufactured in a warehouse and built like a Lego. I know Bertha has like town row houses that are all modulars, and it's kind of cool because it is like a Lego. They just kind of piece them together. So little quick manufactured home. I will be doing a more extensive manufactured / modular unique property class as one of my classes because I think it's a need out there. So stepping into checklists, I've got a quick checklist for you guys whenever you're going through a home on some of the things that FHA is going to look for. This is also the same checklist that VA is going to get into, but I will tell you what, on a VA, it's more extensive. They're there much longer than an FHA. But an FHA is going to, this checklist will get you through, and I'll send this to you after we get done here, and I'll just email it off to you guys. Going to the condo list, we'll be referencing, I'll give you guys your condo approval links, but really just tap me in, guys. If you have any questions about a condo you're going to list or you have a buyer looking into, tap me in, and then I can run it and see where things are at, and also see when the last closings were, because then you'll know how they closed as well, if it was conventional or FHA. But as you can tell here, most of these are all expired, guys. Some of these status dates were like 1986. That's a little scary. But you know, all of these are expired. There's not a lot of FHA approved condos out there. So take it in doubt that it's likely it's not approved and that we're going to have to do a spot approval on it. Concessions here, I've got a quick cheat sheet for you guys that I can send. And concessions for FHA, they allow 6% in seller concessions. So the seller can provide 6% towards closing costs, prepaid items, and like a warranty, that type of thing. Unlike FVA, where VA, you can have a seller pay off somebody's debt or send them on vacation. You can't do that with FHA. Okay. Cool little special programs about with FHA. Some more popular than others. You have the $100 down program. This is a HUD program. I just checked Denver. You have one listing. But it's a HUD program where a buyer can go in and purchase a home with $100 down. And so you can find, I'll have the links, but you can find these homes on HUD. They're great deals. Most of them are not, are fully winterized. You can't get the electricity on. And they usually have repairs that are going to require either escrow or we'll get down here to a 203K mortgage. So usually they have repairs where you have to change the mortgage, but you can also buy a HUD home with conventional financing. So they're not against that. They probably would prefer that because their rules for doing a HUD home with $100 down is tough. And the bidding is pretty steep, but I haven't seen a HUD deal in a long time. So I don't know if a lot of people are paying attention to the HUD site, but we've got one in Denver. And it's not priced horribly. They usually have it go in there pre-appraised. We have to use that appraisal. We can't use any other appraisal. And sometimes I've seen it where HUD will list it above appraisal. So that means that the buyer has to bring in the difference. So HUD doesn't always communicate with one hand versus the other, but it's HUD and the government. We know how that works, but it's a great program. Check out that website. I'll be sending those links to you. Good Neighbor Next Door is also a great program. So not very popular right now, but when there were a ton of foreclosures in 08 to 2013, you had areas that were either had high crime, more poverty, lower income, that type of thing we had quite a few in Greeley even that would show up for a Neighbor Next Door program. And it's kind of to revitalize certain areas. But the only people that can buy these homes are full-time law enforcement, teachers, firefighters, EMS or EMTs, I should say, or EMS, both of them would work. And so you have to basically be a first responder. Military is not included. They can buy these homes, and after 3 years of living there, FHA will waive 50% of what they owe. So it is such a cool program. There are still many states that participate in it. There's not a lot of people that know about it. So the Good Neighbor is a phenomenal program. I think I've done maybe 5 in my 20 plus years. It's not very popular in Colorado, but I believe in some areas it's much more popular. And then we've got the 203K Streamline, and they call them Streamline, and then they call them the big 203K Rehab. So the difference is a Streamline will go to a max of $35,000 to make repairs on the home. And so most of those repairs are cosmetic repairs, appliances, paint, drywall touch-up, flooring, doors, etc. Then and that's a max of $35,000. It's a faster loan to get approved. They're a little bit more lenient about who can do the work and how that process flows. And then you've got the big rehab, the 203K mortgage that has no limit. Has no limit to how much you can spend other than the loan limit. I'll back up to that. You still got the loan limit. And unlike the Streamline, you can do walls and tear down. And really, you could tear down a house, and as long as you're starting with a slab, you can build it back up. So what they'll do is purchase. Let's say you have a house that's been condemned, right? You could go in and purchase it, say $150,000, bulldoze it, and then rebuild it for a $500,000 house, all within the Streamline or all within the big 203K rehab. So we've done quite a few of those. Again, it's one of those things not all lenders do or even know how to do. I see this becoming more and more popular as people, possibly on a refinance level where people are staying in their homes. But I see purchases also, we're seeing a lot more activity on people building or trying to make their house their own and what so forth. And I'm kind of impressed with myself because I'm done like 20 minutes early, which never happens. So I just want to open it up and see what kind of questions I can answer based on the information that you guys have. Even if it's just to say, holy cow, Kat, you're early. But I would also love to know what kind of experience you guys have had with FHA thus far. Anybody want to chime in?
You want to take us off mute?
I don't have you guys on mute. Since you just said something, Lori.
Oh, I am really pretty. Thank you.
Billy, do you have experience with FHAs?
Yeah, actually my first deal was an FHA, my very first deal. And it was a very, very difficult loan that they did.
What was difficult about it?
Well, my client started with a 580 credit. So we worked on, so they were at the low. So they certainly didn't have a 3% down to start with. And so we worked with them, myself, the loan processor, and then of course the mortgage broker, all worked with them to try and get that that score up. And so within, I think it was about 60 days, they were able to get over a 620, which helped tremendously. So we were able to get their down payment below a 10%. They didn't quite make the 3%, but it still saved them, a ton of money, about 10 grand, 15 grand. They did, because it was a difficult loan, they did have reserves that they had to have.
Yeah.
But the process, I feel for them because, I think anybody coming in at that point, and of course, this is a program that's phenomenal for people who are at that lower credit level, but they have to work harder. They really do have to work harder to get into the loan. So it's kind of this battle between they're frustrated because it's so hard, but in the end, it really is. I mean, they feel so worth it. We closed 6 months ago and they still contact me, they sending me pictures of their home. So I think when they go through that process, the end game, is just so rewarding for everybody involved. So
They feel like they're so accomplished.
everything that could go wrong went wrong. It felt like within that process, and it just was well worth it in the end. So.
And I also find, I mean, going back to, it's the 3.5%, but the lower you get in credit score, the more down it's going to require. I've done an FHA loan with 530 credit score, but they had to put 10% down.
Yeah.
But they were able to do it. If we can get an automated finding through AUS, if we can get an automated finding, things will go a little bit better. But man, if it's a manual underwrite, they're selling their firstborn in time and just like, you got to get me this, you got to get me that. They're more mindful also about non-sufficient funds. And
the funding was easy, actually. I think that the biggest issue is that the wife was the only one who was working at that point. The husband, actually, the reason why they were able to buy is because he got a settlement. Do you remember the glass that fell on 17th Street? This was years ago, where there was the window washers.
Oh,
and they fell. Her husband was the guy. So his back was broken in that process. So he got a huge settlement, but he can't work, right?
Yeah.
So that we had this where they've got a ton of money, but they only have one, working spouse. So it was, we had to be creative and put money into an annuity so that it showed that he was getting monthly, income, and just all of the things that, it was a really difficult loan, but they were able to make it work.
The one thing too that I do love about FHA is that it really doesn't count medical collections.
Right.
So you can dismiss medical collections. I mean, the sucky part is the score is still tied to it, right?
Right.
But you don't have to count medical collections. But the one thing we also have to remember, Colorado being different than I do a lot of business in Arizona, it is a community state. It's community state. So in Arizona or other community states, we have to count the spouse's debt and we cannot count their income.
Wow.
So community property state, you run into issues with FHA to where you've got a wife who's like, oh, my credit's sucky. And you're like, okay, well, we might as well just add you to the loan so we can count some income to offset some of the debt. But so you have to, they have some weird rules with community property state.
You have to get pretty creative for sure.
Yep. And we don't deal much with it in Colorado, but termites can be an issue with FHA as well, and the condition and what's so forth that we see called out on termites as well.
Right.
Yeah. Overall, do you feel like this was helpful?
Yeah, no, this was great for me because some of these other programs, that's kind of for me, that's my forte. It was a struggle for me, but I realized that in the end game, because it took us 9 months from start to finish, right? And I realized the end game for me, it didn't matter, all of the things that we had to do. It was so rewarding. So this has kind of become my niche. And knowing that, the HUD, I was questioning that because I come from the East Coast and HUD is really big on the East Coast. Like HUD programs are super big on the East Coast.
Yep.
And so, for you to say that, I'm like, that's so great because I have some clients that might be able to benefit from something like that. So
it's not overly popular in Colorado because we have such an appreciation.
Right.
But, with that said, I mean, I talked to a buyer, now he was in Wyoming, but still he foreclosed because he fell behind. It was a divorce situation. He fell behind on his mortgage And the bank was quick to foreclose on him, and he didn't ask for help. And here the bank is listing the home for 150,000 more than what he owed on it. He could have just
Yeah.
sold it.
Yeah.
So, you know, Colorado, we don't see that a ton. Arizona, we're not seeing that a ton on your HUD homes, because most people are smart enough to tap in their servicing company. But when you do get on the east side and the south, where the appreciation is just much slower,
Right.
you see a lot more HUD homes for sale.
Right. Well, and
Yeah.
I'm getting my license in Florida, so that's going to be helpful there too.
Yeah,
So.
Florida and the darn roofs right now, though.
I know. I know there's areas where you have to get crafty with your insurance, all of it, you know, because your major insurance companies have all pulled out, just hurricanes and everything else, you know, so.
Yep, it's not
It's
for the faint of
very
heart.
different environment. Yeah.
For sure. But yeah, I mean, I'm glad I finished this early. Does anybody have any other questions for me? Brian, Megan? I don't know who Shingle is. Okay.
That was great information. Thank you.
You're welcome. You're welcome. Anastasia, any questions? Oh, that's not
I'm listening in the background. It's me. So I just wanted to say your information is amazing as always. I always throw Kat's name out to people because she doesn't put people in a loan that isn't good for them. She's very thoughtful in how she proceeds. She works hard for months and months and months on end to make something happen for people when they want it to happen. So I never put anybody in front of you guys that I don't 1,000% back. And honestly, she's done amazing things for clients. But I'm excited. What's our next one?
I'm doing the basics of VA, which might have to be like a 3-part thing, because
There's no basics to VA.
VA is probably the best loan program out there.
Best.
It is so entwined with loopholes that I want to keep it basic, keep it enough to make us dangerous, right? But
Yeah.
it may have to be a 2-part series. So let me see what I can pull together. But I'm gonna do a series every Thursday, 2 p.m. 2 p.m. Mountain Time, and I'm gonna just keep going until I run out of ideas.
I love it.
So
We're here for you. Put it on
Yeah.
our calendars, put it on our stuff.
Yeah.
We want it.
Yeah, we'll keep it basic, but like I said, I want you guys to be able to handle an objection, so that if somebody says, oh, I can't do this, I had a bankruptcy, and you're like, ding, 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 they can do FHA, it's been 2 years, we're good. You know, to where just those things click with you to where you can handle objections. I don't want you to have to do my job. I don't want to do my job sometimes. So, and I don't want to do your job. But you know, we're here to just kind of reference things and be able to keep on top of our toes, and also question something. So if somebody's like, no, you can't do that, and you're like, wait a minute, I think we can, you know, to where you'll learn as you go. But hopefully the basics will, again, just make it, get you enough to make you dangerous. So
You're the best.
all right, well, I'll see you guys all later, and you have a great rest of the week.
You too.
Bye.
Hey, Catherine, I put my email in the chat. Is that where you wanted it for
Yep,
us to
I
get
got
the
it.
information?
Yep.
Okay,
Got
perfect.
it.
Thank you.
Perfect. Thank you guys. Talk to you later.
Thanks, Kat.
Okay, bye.
I don't know why I keep coming up as Anastasia. I keep changing it.
I think that's your stunt double.
What?
I think it's your stunt double.
I know. I'm like, I keep changing it and renaming it back to me.
Oh, I think you have to do it in Zoom.
So,
Are you doing it in Zoom, or are you just doing it like right now?
I was doing it right now, so I'll get in Zoom. Hey, can you make sure if you CC Gage on everything, he'll add it to the training calendar and our
Right.
like printed online calendar, and he'll have you just your series in there, and then you just populate in our page as you go. You have free range. I made you.
Yep. And I'm being mindful of that, but yep, I'll send it to Gage, and then I've just been posting it in Facebook.
Love it.
Cool.
Thank you.
All right, how are you?
I'm good.
Good. Good.
Yeah.
You cut your hair?
No, I just washed it.
Oh. I wash my hair like once a week, so people are like, you do something?
I went like
no,
4.
I'm on day 8.
Yeah, I went like 4 days, and then when I tried to style it, and it just goes like, it's not cute anymore.
Yeah, I literally go a full week without washing my hair.
I haven't gotten that far yet.
Yeah.
So
Yeah.
I'll get there. But yeah, no, it's just really clean right now.
Well, that's good.
Thanks.
All right.
Yeah, well, we're gonna be out for family reunion all next week, so feel free to just like, and I'm just gonna start if people have long questions, I'm gonna shoot them your way.
Okay, cool. Thank you.
Thank you. Bye.